back. Welcome, Walter Jason here. I hope you have an awesome day. In today's video, I'm going to be sharing some information from Redfin. So if you missed my previous video, I shared some information that home buying demand is decreasing. They also shared some leading indicators that our housing market is slowing down as well. So for example, we're seeing fewer people searching for houses for sale onto google.com. Also, Redfin is seeing fewer requests for home tours from Redfin agents, a decrease of 13% in the past 4 weeks alone. On top of this, we're seeing fewer home showings by real estate agents. That's some new data I shared from showingtime.com. Also seeing fewer mortgage applications for home purchases as well. And meanwhile, mortgage rates have increased above 5% to levels we have not seen since 2010. So that was the topic of my previous video. So I want to share some more information about the current trends in our housing market regarding home prices, housing inventory, new listings, and much, much more. So I hope you get a lot of value out of today's video. Also, check out that link below if you want a real estate agent referral in your neck of the woods, whether you're looking to buy or sell a house. That's homeandmoney.com/Jason. So with that said, let's begin today's video. These are the key housing market takeaways for the 400 plus US metro areas. So Redfin tracks this on a weekly basis for 400 plus US metros in the US, of course. And this is for the 4-week period ending April 17th of this year. In this report, they stated that the median sold price was up 17% year over year to a new all-time record high of $393,000. So they're saying that the median sold price in the US is at $392,000. Compare that to the National Association of Realtors. As of the end of March, the median sold price in the US, according to them, was $375,000. So at least for these 400 plus US metro areas, we're at all-time record highs for home prices and the biggest increase since August. Again, a lagging indicator. It'll be very interesting to see what these stats look like in 2 to 3 months from now when we truly have seen the effects regarding these rising mortgage rates. Meanwhile, the median asking price, which is the asking price that the seller asked for their house, it rose 14% year over year to actually just under $400,000, and that's down slightly from the all-time record high set for the 4-week period ending April 10th of last week. So in other words, it's interesting to see that the median asking price actually decreased compared to last week, even though we're up year over year. Meanwhile, the monthly mortgage payment on the median asking price home rose to an all-time record high of $2,318 at this time, a 5.11% mortgage rate. Meanwhile, the average 30-year fixed rate mortgage is approximately 5.4 to 5.6% at the time of this video. In any case, the average monthly mortgage payment is actually up 38% from 1 year ago, when mortgage rates were at 2.97%. It's pretty crazy to think that mortgage rates were at 3% 1 year ago, and now we're basically at 5.5%, which is absolutely astonishing. I don't know if we've ever seen this in our housing market ever. In any case, pending home sales, which by the way, anything in green here is a leading indicator. A leading indicator about what's to come with our housing market in the months to come. So pending home sales, which is when a home seller accepts an offer from a home buyer, that's actually decreased 2% compared to a year ago. Meanwhile, new listings, which is when a home seller lists their house for sale, that actually is down 8% from a year ago, and the 22nd straight annual decline and the biggest drop since early February. This is pretty unusual, I should say, because during this time of year, I would say March through June, July, that's really when a lot of people list their house for sale. So it's very unusual for the number of new listings to decrease. It should be moving in the opposite direction. It should be increasing. And if we want to see home prices decrease, or for demand to decrease from home buyers, and for home buyers to have a better chance at buying a house, we obviously need a lot more new listings hit the market. We need this number to move upwards and upwards greatly and not downwards. In any case, active listings, which is another word for housing inventory, fell 21% year over year. Of course, we have a lack of houses for sale in the US right now. So before I share some graphics with you guys to see how now compares to the past few years, here's a stat I also want to share with you guys. It says on average, 3.3% of houses for sale each week had a price drop. Obviously, this number is very, very low because this means that 97% did not have a price drop. However, this number has been increasing though, and it's something I'm personally following, and I'll definitely keep you posted because we're seeing more and more home sellers dropping their asking prices presumably because home buyer demand is decreasing. Anyways, it says overall 13% dropped their listing prices in the past 4 weeks. That's up from 10% a month earlier and 9% from a year ago. This was the highest share since the end of November as well. And keep this in mind, this is not the season where we typically see home sellers dropping their asking prices. This is usually a time of the year where the price drops or the share of price drops tends to decrease because we have so much buyer activity, but it seems like we're not really seeing that right now. Okay, the first graphic I want to share with you guys is regarding the median sold price in the US. Again, this is for the 400 plus US metros, and this is a 4-week rolling average. So right now, home prices or home sold prices have increased 17% to a new all-time record high. A big increase from 1 year ago when home prices were just over $325,000 in 2020. We were basically at $290,000 approximately. So obviously the trajectory here has been skyrocketing. We'll have to see if that continues though, given the fact that mortgage rates have been increasing greatly though. Meanwhile, the median asking price is up 14% year over year. But have a look at this because that has been skyrocketing really ever since the middle of February. But we're starting to see some softening here. And actually the median asking price has decreased more recently. So we'll have to see if that trend continues because as you can see here in 2021, the asking prices here more or less were up all the way through October. So we'll have to see if that continues. Given the fact that mortgage rates have been increasing. Also something worth noting here, back in August 2021, we reached more or less all-time record lows for mortgage rates. Mortgage rates were around 2.75%. And as you can see there, look what happened though. Potentially this could be what happening is that when we saw these record low rates in August, at the beginning of August of 2021, home prices increased in September and October. So we're not going to see that this year because we should see mortgage rates continue to increase as the months progress. And I'll definitely keep you posted. And as I mentioned, home buyer mortgage payments increased 37.8% year over year to a new all-time record high. So the average mortgage payment to buy the median home price right now is $2,318. I believe that's principal interest only payments. But look at the trajectory here. It's absolutely insane compared to 2021. I mean, during this time last year, we saw this level out, but we're not seeing that right now because this year mortgage rates have been increasing greatly and we're not seeing a decrease in home prices just yet. So the average monthly mortgage payments have been skyrocketing. Meanwhile, pending home sales have decreased 1.7% year over year, pretty much in line with 2021. And the number of new listings has decreased 8.2% compared to a year ago. So moving the opposite direction. I mean, look at 2021, completely ignoring 2020 because we had COVID lockdowns at the early parts of March and April, and that really caused our housing market to be on pause. But as of 2021, we didn't have that. So new listings were increasing basically through the summer months of 2021, which is pretty normal. So what we're seeing right now is a decrease though. In my personal opinion, this could be due to the fact that people are locked into rates of less than 3%. And so why would they sell to move to buy a new house when their new mortgage payment's going to be like 5.5%, or they're going to be renting and rents have been at record high levels as well. And by the way, I'm going to be sharing some stats regarding the rental market as well because there's some interesting stats regarding that as well. In any case, new listings are down, not a positive trend we want to see if we want to see home prices decrease in the near future. Active listings are down 20.9% compared to a year ago. I mean, look at how much more houses we had in 2020. We had over 900,000 houses. Now we have less than 500,000 houses right now. Meanwhile, 58% of the pending home sales went under contract within 2 weeks. This basically means that 6 out of every 10 houses in the US, at least for these 400 plus US metros, the seller accepted an offer within 2 weeks. That is an all-time record high, way above 2020 levels and slightly above 2021. Yet another all-time record high is that 44% of all pending home sales had an accepted offer within 1 week. So basically 4 out of every 10 houses that get listed for sale had an accepted offer within 1 week. That's also an all-time record high as well. Meanwhile, houses are also selling very, very quickly. So right now, the days on the market is 17 days. Compared to 2021, it was approximately 25 days. So houses are selling more quickly compared to past years as well. Also, 54% of houses sold above their asking price. So basically half of all houses that get listed for sale are selling for over their asking price. Obviously, every market is different, but these are just averages though, right? So 54.4% compared to just over 40% compared to 2021. Here's a graphic I'm going to be paying attention to though over the next several months here, and I'm definitely going to be reporting this to you guys. So 3% of listings had price drops, obviously a very low amount. So 97% of the listings did not reduce their asking prices. They presumably sold for the asking price or more than asking. But look at the trajectory here. So the red line here is 2022. The blue line here is 2021. But look at the levels here. Ever since March, which by the way, March is when mortgage rates have been increasing greatly. I believe over the past month, mortgage rates have increased about 75 basis points. That's a big increase in 1 month. In any case, we're starting to see more and more home sellers reducing their asking prices because at the beginning of March, that level was at less than 2.5%. Now we're at 3.3%. Obviously, we're not talking about big numbers here, but if this trend continues, this could be good news for home buyers looking to buy a house because one would presume there may be a fewer home buyers competing against the same houses listed for sale. However, we'll have to see if we see still very low housing inventory levels, which could cause further upward pressure for home prices. Meanwhile, the average home in the US sold for 102.5% over the asking price. This is a big increase compared to a year ago. So compared to 1 year ago, we were about just over 100%. Now we're at 102.5%. Again, this is a lagging indicator because when we're talking about home sold prices or anything related to homes actually selling, this is really an indication about what our housing market was approximately a month ago. Here's yet another trend that I'm going to be following and reporting to you guys as well. Here's the Redfin Home Buyer Demand Index. Again, this is an index based on requests for home tours and other home buying services. So if this index decreases, that means they're receiving fewer requests to look at houses that are for sale for home buyers who want to use a Redfin agent, for example. So that has decreased 4% year over year. So really ever since the middle of August, this index has been decreasing greatly. Look at it's like basically going straight down here practically, a 4% decrease compared to a year ago. And I'll definitely keep you posted regarding this because one would assume that if Redfin is getting fewer and fewer requests for home tours and other home buying services, this could be a further indication that home buying demand is decreasing. Okay, to give you a brief update regarding the rental market, it's still very similar to the housing market because we're seeing a lack of inventory for houses available for rent and also record high rental prices as well. So here's a new report according to CoreLogic. They actually just published this a few days ago. They stated that nationwide single-family rent prices are up 13.1% year over year, the 11th straight month of record level gains. And the principal economist at CoreLogic had this to say: single-family rents, again, these are for single-family houses, single-family rents rose at more than 3 times the rate from a year earlier and more than 4 times the pre-pandemic rate. Strong employment and low supply have pushed single-family rental vacancy rates to low levels and have contributed to high growth in rents. Meanwhile, Redfin is reporting that rising mortgage payments, again up 34% compared to a year ago, of course due to rising mortgage rates and of course high home prices, are pricing more people out of the home buying market, which could lead to even more increases in rents. So to follow that up with a video I made about a week ago, we're currently seeing a trend with builders constructing apartment buildings for rent versus single family houses to purchase by home buyers. So this is a report from the US Census Bureau. I went over in detail this report, but I just want to share one little small bit of it for those who missed this part of the video in my previous video. So these are the total number of housing starts, and this is, by the way, is according to the US Census Bureau. These are housing starts. So in the US, these are total housing starts, and by the way, these are in thousands of units, and they're seasonally adjusted annual rates. In any case, total housing starts are actually up 3.9% compared to a year ago, and actually up 0.3% compared to February 2022. So right now we're at 1.7 million at a seasonally adjusted rate for housing starts overall. However, though, look at the differences though. So multifamily properties are up 7.5% compared to a month ago and are up a whopping 28.1% compared to a year ago. In stark contrast though, the number of housing starts for single family houses are actually down 4.4% compared to a year ago. So it appears that investors and builders are much more bullish regarding the rental market than single family houses. This is because single family houses are being purchased by home buyers, which in general, a lot of people, or about 75%, use a mortgage in order to buy a single family house. In stark contrast, if you're a builder and you want to build an apartment building, for example, that's not tied as directly to mortgage rates. So it's very interesting to see how home builders are more focused on multifamily properties and not so much regarding single family houses, at least when it comes to housing starts and also permits pulled as well, because you can see this here, permits pulled, a big increase in multifamily and a decrease in single family houses. So comment below with your biggest takeaways from today's video. Also check out that link below if you're looking for a real estate agent referral in your neck of the woods. Hope you have an awesome day and look forward to seeing you on the next video.